Hi, friends. Today is our homebuyer workshop. My name is Patricia, and this is my colleague, Gustavo Segura. How are you doing today, Gustavo?
Doing great. Thank you for having me.
Fantastic. So we have this homebuyer workshop every Wednesday, and we basically go over all of the steps in buying a home. And if you're not ready to get started today, that's okay. You still need to know what the steps are to take in order to get that path paved in order for you to be ready to purchase a home. So we every week we bring different content, and it's all structured around the home buying process. And today we wanted to basically just go over what some of the benefits are and what the scenario looks like when you're renting versus buying. And I had so many people, Gustavo, come over this weekend. I had an open house in Bell, which is a little pocket neighborhood in between Bell Gardens and Maywood.
Mhm.
There were so many local residents that came by. I must have had over 50 people. I was
Wow.
shocked that so many people came by. And some of them, some of the visitors that came by, they actually live in the area and they're renting and they live around the corner, maybe a few blocks away. And so I was getting a lot of questions about, what would my payment look like? What do I need to actually get into a home? And is it even possible? Right.
Right.
Because I think right now people are watching the news and they're seeing all of this negative reporting. It sounds like the market's going to fall from the sky.
Right.
And so I thought, this is a good opportunity to basically just talk about the steps and what the homeownership benefits are. And I felt like I was doing a home buyer workshop at the open house. So
And live in person.
in live, it was truly live. And so we had so many people come by, and I was talking to each of them individually. We were supposed to end at 4 o'clock, and we ended up ending closer to 5 just because we had so many people in there. And I was talking to everybody about, what the scenarios would be for down payment,
Yeah.
different loan types, right? And the fact that you don't have to put 20% down on a purchase, you can in fact put down 3% or 3.5%, and just kind of what that looks like. So I wanted to, and by the way, today we're missing our other colleague, Bill. He's taking care of a personal matter today, so we are missing him right now. And hope all goes well with him and his family. So Gustavo did a really good job at putting together this flyer for us. And it's basically a scenario. And I'm going to share my screen right now. It's a scenario on buying versus renting and just how much equity your property ends up appreciating at. And so I thought this was a very, very informative flyer, very informational. Thank you for putting this together for us, by the way,
Yeah, no
Gustavo.
problem.
So let's talk about this. So
Yeah.
this is, should I buy or should I rent? And, a lot of people are just in that rental cycle where they never even consider really buying a home because they think that all they can do is continue renting, right? And so every year they get their rental increases and they just pay the new rental amount that they've been ordered to pay. And then the
Right.
next year goes by and they get another rental increase. And that could be anywhere between 3%, maybe 5%. And so now there's a higher amount. And every year it's that same cycle. They might
Yep.
get lucky, where a couple of maybe 1 year or here and there, the landlords may decide not to raise the rent because they've been such good tenants, and they also want to retain those good tenants. But over time, the rental amount is still increasing and still continuing to go up and up and up.
Correct.
And
Yeah.
so let's talk about this information that you've provided here. So we're
Yeah.
looking at a property with a home value of 725,000, and that's the purchase price, right?
Yeah. So this is home price 725,000. And I put down here a 10% down payment. and the interest rate of about 6.291. Now, that interest rate is a wholesale interest rate, which is what I can do and I can deliver. And that is with no points, no cost to the buyer. So this is where I'm helping out to make sure that they don't have additional cost at closing. So it's still a very aggressive rate that I can get and I can deliver. And this is where, I wanted to help visualize the benefit of renting, because a lot of times we get very short-sighted in that, if renting is going to cost me $3,600 year one, but buying is going to cost me a total of $4,900, because that includes the principal, the interest, my
Right.
property taxes, my mortgage insurance, and home insurance. Well, that's a good $1,300 difference, right? I mean, that's a pretty penny.
That's
So
that's pretty significant.
yeah, so right away that could also just kind of, be something that we don't want to take the next step. We want to be fearful of. So what I wanted to make sure that we see is, well, what's going to happen over time, over 5 years, over 9 years, and what kind of situation you're going to be in, because ultimately when you're buying, you are investing in that property. You're now, an owner. You have an asset now, very much like the landlords have now. They have these homes that they can rent out, and that's what someone has been paying for, and that's what somebody's helping somebody else.
Right.
And back to your open house, I'm glad that there's a lot more people out there, because I think hopefully they realize, what, I need to get a house instead of just continuing to pay and pay, because rent is going up.
Right.
I
It's
have
gonna
here,
continue to go up.
yeah, exactly. And I have here some conservative numbers. So I have an annual rent increase year over year of about 6%. So let's take a look at this scenario. So we already talked about year one. So that's a $1,300 difference, right? But if we're gonna have that, year over year increase on the rental, by year 9, you could be spending around $5,700. Okay. Now on the
So let me interrupt you really quick. So we're looking at year one, you've bought the home. You bought a home that was 725,000. That was a purchase price.
yeah.
Your down payment was 72,500, which was 10% of that purchase price. And the loan amount is 652,500, and that's a 30-year fixed loan, correct?
Yeah, that's a 30-year fixed loan, yes.
Right. So the beauty of that is that you have that fixed payment in the event that maybe you don't refinance, let's just say, but most likely you will. So this payment will actually end up coming down. Let's say you close this year in 2022, but the rates are going to eventually go down. And although nobody can really time the market exactly, but the market is cyclical, right?
Yes.
And so the rates are going to eventually come down. So just imagine the scenario that we're looking at right now, the savings is actually going to be even substantially higher over time, because this is based off of a 30-year scenario, let's say without refinancing, right?
Yeah,
But once
correct.
you refinance, let's say down to maybe a 4.5%, your savings and your monthly payment is actually going to be reduced from the 4,915.
Correct, exactly. So this is just like if you were to stay in this loan and never refinance again, right? So in those 9 years. And I want to bring the numbers down here at the bottom, where we have the home value again, 725. You have your down payment about 72,000.
Mm-hmm.
You have your remaining loan balance of 652. So that's what that payment is based on. Now, an average US appreciation on a home is about 4.55. Now, we know in California it's a little bit higher, but I just use, excuse me, some conservative numbers here, so 4.55. So then that means that after 9 years, this house at 725,000 is going to be over $1 million. Now, that right there is an appreciation that is over $357,000, as you can see here on the summary. So that itself is just appreciation. That's just the investment, right? Now, people have made payments on it. So you've made payments of about $88,000 over those 9 years, because you're paying your principal and your interest. So you're buying down the loan slowly. And then you also take your original down payment of 72,500. So if we can combine all that, the appreciation that you got in 9 years, the payments that you've been able to pay down on that loan, and your original down payment of 72,000, you have now an equity on that house of over $500,000, so $518,000. Now that is something that If on year 9 or 10 you go ahead and sell, that's money that you're going to be able to take with you to the next home. You can use that as a down payment. So, you know, you're going to be able to maybe get that move up house. There's a lot of opportunities that you can do with that equity, and that's something that just renting doesn't do for you. You know, renting, you're going to have the flexibility. You can move anytime you want. You can, you know, change that very easily. There's no limit. There's no like you don't feel pressure, you know, with property taxes
Well, and
any
then
other time.
there's like no attachment, right?
Yeah, there's no
You
attachment.
have, as you mentioned, you know, you can get up and leave whenever you want. Of course, you have the lease agreement that you're tied into, but those are usually annually.
Exactly.
And sometimes they're even month to month. I've seen a lot of, you know, landlord owners where they just have a month to month agreement.
Yeah.
And in that case, you can pick up and leave anytime.
Yeah.
When you buy a home, you've planted your roots there. You have your, you know, you might have customized it already. You might have changed the look of the home. You might have added some features to it that are now adding value to that property. And
Exactly.
so you're increasing the value over the time that you've lived there as well.
Exactly. Yeah, exactly. And this is just normal appreciation. Like you said, now you're adding, you know, features, benefits that are going to be, you know, a little bit more luxury items. If you are doing flooring, if you're doing, you know, kitchen counters, cabinets, you know, those kinds of things, right? Over a 9-year period, you're making these adjustments. There's going to be some of that money that you're going to be able to get back from investing in that property. So, you know, when you take a look at buying versus renting, you have this equity that you're going to be able to gain over the years, you know, just like rates go up and down, you know, every day, but in general, you're going to be able to take this property, be able to get the equity and be able to move on to the next one, even though maybe one year you have a down or a smaller appreciation. The next year you may have 10%, 15%, you know. But in general, you're going to be much better off owning property.
Right. And the other great benefit to this is, you know, just looking at the numbers here, you're talking about over 9 years, appreciation is, you know, over 357,000.
Yeah.
And it's, you know, when I'm looking at this figure, it's pretty much close to, you know, my scenario, because I bought my home about 8 years ago for 400,000. And right now in the city of Downey, there isn't anything available, not even a condo that you can get at 400,000.
Yeah.
And, you know, the homes here are, I would say, on the lower end, between, you know, maybe 675 and up from there. There's also homes that are, you know, 1.5 million, 2 million, and 3 million. Just depends on the size and what the condition is. But in my case, I mean, I have, you know, I would say it's, you know, it's a nice home, but it's worth right now, you know, about 750, and I bought it for 4. So
Yeah.
that just goes to show you, and I've lived here for 8 years.
Yeah.
So if I wanted to sell it, and as Gustavo mentioned, either upgrade or even downsize, because I have a 2-bedroom, 2-bath, I have a over 5,000 square foot lot, which the maintenance is kind of low because it's more of it is cement than grass. But either way, if I wanted to sell my house today and use that equity and leverage that towards a purchase of a new home, whether it's upsizing or downsizing, the whole point of this scenario is that you're going to have that. It's like a savings that you're growing over time. It's like a forced savings plan, because as you're paying down your loan, the equity on your home is rising. So it's like the scales are tipping this way, right?
Yeah.
And so over time, you're going to end up paying down your loan, irrespective of what the interest rate is. You're still going to be paying towards your principal, which is going to help grow your equity.
Exactly.
Time.
Exactly. So even though you are paying, it's almost like you're just taking money from one pocket to a little and then putting a little bit on the other pocket. It's still your money. yes, you have to pay for the interest and the cost of borrowing and the property taxes, but you're enjoying that property, right? And then some of that money is staying with you. Now, there's a couple other things here too that, I haven't even accounted for, which are some of the tax benefits. So you're
Sure.
able to write off, some of the interest on here on the property. So, once you become an owner, you have some things that open up to you from a tax perspective, from an
Mhm.
investment opportunity, equity, and then of course the flexibility. You can design it, you can change carpets, floor, you can really make it your own. And like you said, you can set some good roots, where you love the neighborhood.
Right. Yeah, and one of the other benefits that I like, for example, in my situation is the people that are living with you, your family members, whether they're relatives or your children or just other family, because I am also seeing more, multi-generational families living together right now, just to be able to get into a home and stop renting and put that money towards a mortgage payment. But what I am seeing as well is that once you get into that pattern of making your mortgage payment every month, you're shopping for home insurance and getting the best quote you can. You have this new budget now that you're working with, because now you're also responsible for maintenance on the home, whether that's upgrading, maybe your landscaping or doing a simple termite treatment every 7 years, things like that. But your children or relatives are living with you, they're getting that financial education from you as a homeowner, because they're seeing all of the things that you have to deal with, all the responsibilities that it takes to own a home.
Yeah.
So when they're ready to go out and buy their home, they already have a pretty good, outlook on what it takes to be a homeowner,
Yeah.
and all of the responsibilities that come along with that.
Yeah, definitely. There's a lot of questions that get asked, as you go down through this process, and the whole family benefits from it. And a lot of these consultations that I do, it's not just the husband and the wife, but if they have kids, they listen to it. Especially if they're a little bit older, they're also in the mix of things, so that when they need to buy a house, one, they'll do it at a younger age, but also they're more prepared and more equipped to what is needed. And as we
Right.
can see here, I mean, a lot of people talk about how, it's a great wealth building tool. And it really is. I mean, especially here in California, some of these prices, you're able to take a home, you're able, a lot of people, what they did during the pandemic was refinance, take some equity out, because they had 500,000 or six, seven, and then they were able to take 100,000, buy a second property. They bought that property with that down payment.
Right.
Now they can go ahead and maybe rent it out to a family member, help
Mhm.
them out, or they have an Airbnb, or they have something else that they can use and create more wealth on it. So it's a great tool.
Yeah, absolutely. And I really like the scenario that you've given us here. It really helps to provide that clarity and just get a visual on what it looks like to own a home in today's market, and be able to capitalize on that equity and build off of it. Because when you own a home, that's just your starting point, the first home you get.
Yeah,
And then the whole goal from that is to eventually build from, this equity that you have now, and go out, like Gustavo said, maybe get another property, and eventually start building a real estate portfolio, and or just helping your kids. Maybe you have children that you would like to help purchase a home as well. That
yeah,
was one of the main, the commonality I saw this weekend, this past weekend with my open house, was that a lot of parents were coming by saying, I really want to help my adult child buy a home. How can I help them? And so they're already retired, but they have their home to use as leverage to help them buy a property. So we were talking about refinances, a home equity line of credit. There's just so many things that you can do once you have a home, and the different ways you can leverage that.
yeah,
So I think
exactly.
that's one of the benefits too, is that you can, in years to come, you can use that to, help yourself, or help somebody that needs your assistance, maybe somebody in your family, immediate family, and just basically help them get to that step that you're at today. But remembering you were there 20, 30 years ago, right?
Yeah, no, exactly. And there's loan programs that will allow for someone that is not going to be living in the house. So it's a non-occupant co-borrower. So that's where, you know, as long as they can meet the responsibilities of that other home, if they have one, or if they don't, but they're renting, you know, their income takes care of those responsibilities, and they have room to help someone else to take care of that other house. They, you know, there's loan programs that will allow, you know, someone to have a co-borrower that is not going to be living with them. So, and also use gift funds as well. Like you talked about, you know, having a parent that's going to give them maybe the down payment, maybe there's a wedding
Right.
gift, you know, maybe there's those kinds of situations, and then that's going to, you know, set them in the right path. So
Yeah.
there's programs that will accept all that and that we can do. Plus, you know, if there's any seller concessions that are happening, right?
Yes, absolutely. And we've seen that happening lately. So it's a really, it's a good thing. It's really
Yeah.
helping buyers get into a home and realizing that dream that they've been holding on to.
Yeah,
So
it really is.
we're gonna wrap up this call today, and I appreciate everybody that's watching here. If you guys have any questions at all about what we discussed today and maybe what the steps are in buying a home or the documentation that's needed, I know sometimes that seems a little overwhelming, but it's actually pretty simple to gather a few documents and check your credit and see what your FICO score is, fill out a loan application, and just kind of get a few pay stubs together. So it's really minimal, the information that Gustavo would need in order to get that pre-approval going for you. So if anybody wanted to reach you, Gustavo, should they contact you?
Yeah, direct phone call or a text, 714-334-4563. Love to be able to help and answer any question. And believe me, there's no question too small. It's a big purchase. I know there's probably someone thinking about, you know, a simple question or a hard question. Please just ask it.
Right, exactly. So bring all your questions, give us a call, put us to work. We're here to help you.
Exactly.
I can be of any assistance. I'm at 323-365-9909. And this concludes our home buying workshop today. Reach out to us. We're here to help you. And I wish everyone a wonderful Thanksgiving.
Yes. Happy Thanksgiving to everybody.
Okay, thank you, Gustavo. See you later.
Thank you. Thank you, Patricia.
Bye-bye.
Bye.